Certainly 2010 and 2011 were not great years as an equity investor in India. Now, there were a number of reasons for that. India was one of the darlings of the emerging markets before that. And really after this period, as we entered 2010, 2011, we saw a number of factors which brought the market down. Now, very briefly, these factors were mostly domestic. Of course, there were international worries, but the domestic factors what was worrying the market was inflation, an unprecedented tightening by the Reserve Bank of India, India's central bank, and thirdly, the corruption scandals which were erupting in various sectors in India. Now, all these trilogy of issues really brought the market down significantly. Now, if we look today, the market has rallied quite hard this year. And really we have to ask ourselves, have all these factors gone? I think certainly a couple of the factors certainly are improving. Inflation has eased off. The Reserve Bank has begun to cut interest rates. So they're positives. On the corruption side, the government is finally acting. We've seen a new finance minister coming in. We've seen some court cases going on the corruption side. And so the interface between business and government is beginning to get better again after a confusing period. Now, is it a good time to be investing in Indian equities? Well, we think with a new finance minister in place, we think reforms are starting again, and current valuations, India does look quite attractive. So we ask ourselves, is the India story back? We think it's beginning to come back. We're not quite at the bullish extremes that we saw 3 or 4 years ago, but we think we're at the beginning of a good run again.